So good evening and welcome to all our analyst friends and investors who have joined us for this Q1 FY20 call. Are you able to listen me clearly?
You are audible, sir. You may please go ahead.
Okay, thank you. So you must have gone through the press release and also the presentation that has been uploaded on our website. We have reported the strong operational and financial performance for the quarter. And let me share with you the key operational highlights. In our transmission business, we continue to register excellent availability of all our assets at close to 100% during the quarter. And these have resulted into incentive income of almost 13 crores. Our distribution business, Adani Electricity Mumbai Limited, which we acquired last year, has started contributing significantly to the ATL's top line and bottom line. And we also have improved on AT&C losses, down about almost 1% point year on year, and supply reliability reaching to almost 100% during the quarter. On a key financial highlights, our consolidated operational EBITDA was up by 139% year on year, and our consolidated comparable PAT after removing one-time interest income grew by 80% year on year. Coming to the segmental performance, our transmission business operational EBITDA is of 615 crore, increased by 23%, and our operational EBITDA margin was maintained at about 92%. Also, the comparable PAT has grew by 33% year on year. The major contributor in the transmission business is that the 7 lines has become operational in almost March of last year, financial year. So that has started contributing, and in the first quarter, we have a revenue of around 147 crores from these new transmission lines which has become operational. On the distribution side, the operational EBITDA is of 584 crores, which is up by 21% year on year, and these are translated into operational EBITDA margin of 28%. One of the focus of Adani Transmission has a strong commitment now towards the ESG. We have been publishing sustainability reports over the years. However, this year we took a further step forward and published our first integrated annual report for FY19 in line with the framework laid out by the International Integrated Reporting Council. This is the first such initiative within the Adani Group and one of the first in the Indian power sector. We remain strongly focused to maintain high standards of governance and transparency. In addition to this, we have a strong emphasis on safety and sustainability and contributing to some of the UN Sustainable Development Goals. Let me just cover up on the debt front. So on the debt side, our consolidated net debt is close to 18,000 crores, including the debt of our acquired distribution business of Adani Electricity Mumbai Limited. So if you consider our annualized EBITDA, which is 1,200 crore in the first quarter, then we are in the range of around 4 times debt to EBITDA. So this is a very, very healthy sign, and all of you are aware that in this quarter, we have been rated with a stable outlook, and some of the rating agency has negative watch as well as negative outlook. On the projects on hand, we have around 6 projects on hand with a capex of roughly around 4,000 crores, which we will be doing it over a period of 2.5 years. And on a distribution front, we are planning to capex of around 1,200 crores this year. We are also doing an HVDC transmission line in Mumbai to augment our distribution capabilities. So these are my summary of the numbers and the results. We are happy to take any calls, any questions we have from the analysts. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Any questions?
So we have the first question from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Good evening, sir. So my two questions. First is on the accounting treatment, on the accounting side. So the interest costs have gone up substantially QOQ. Is it due to the Ind AS 116 impact? And what is the corresponding impact on the the expense side? If you can elaborate on that.
So I think why the interest has gone up, because last year in the similar quarter or even in the Q4, we did not have 7 operational assets. So this quarter onwards, we have a revenue also coming up on the top line. As I mentioned that we have 147 crore revenue. And the date corresponding to that asset is reflected into the interest cost.
But the depreciation hasn't gone up, to that effect. Similar, there is hardly any 9 crore increase QOQ.
So you are saying that depreciation has gone up?
No, I'm asking while the interest has gone up due to the commissioning of new lines, the depreciation hasn't gone up to that effect.
So this depreciation change of 6 crore is because of this new lease accounting standard of AS 116. Because what has happened is that from 1st of April, they have introduced the new accounting standard, and all the earlier whatever was the lease rent which we were paying were straight away debited in the balance sheet in the P&L as an O&M expenses. Now it has to be bifurcated into the finance expenses and the depreciation expenses. So because of that, there is a change in the depreciation which you are seeing it.
So is it possible to quantify the impact on the the line items?
Sorry?
Is it possible to quantify the impact of Ind AS 116 on the line items?
So overall impact on the EBITDA, which has increased because of the Ind AS, is 1.76 crore net.
Okay.
Hello. Yeah.
Because I will take it offline. So
you can refer the note number 8 of our. You can refer the note number 8 of our.
Sure, I'll have a look, sir. So my second question is, this is pertaining to the transmission business. So you commissioned 7 new lines, and I think the corresponding cost is 31 billion, while we are expecting a top line of 6.2 billion. Am I right, sir?
Yeah.
And sir, what about the commissioning? When did the commissioning happen for all these 7 lines? It mostly happened the back end of FY19?
In the month of March. Mostly in the month of March.
Okay. Sir, then sir, we have two new assets now. The 4 were under construction. So we have now 6 under construction lines. So what is the cost? Yes, sir. My question is, what is the cost burning? What is the revenue in the first year you are expecting in FY22? And what will be the capital cost of all these 6 put together?
So you are, Anil here, you are basically asking for corresponding tariff for each of those items.
Yeah, levelized tariff or the first year tariff, either thing.
Yeah, no. So we'll tell you the tariff for these 2 projects that we won recently is 200 crores. Okay?
Okay.
And
is
the
it a levelized tariff?
Sorry?
Is that a levelized tariff, sir?
200 crores is the annual tariff. You take that, yeah.
Okay.
In the sense, this is the way the earlier times of how the levelized tariff used to be calculated for power projects is slightly different for the way the transmission net present value is calculated. But you take that 200 crore is the annualized tariff.
What we can do is that you can, we will mail you these numbers because these are the top line.
Sure.
So we will mail you that number.
Sure. And sir, so we have 2 projects, and I think the commissioning timelines are very tight. And I think for all the new upcoming projects which are in the big pipeline right now, the timelines are very, very strict. So does it? What's your view on this? View on that, and how is the competitive intensity panning out in the recent bids? Have you seen the number of competitors increased, or it is more or less the similar lines?
No. So there are 2 things. You see that in the past we have shown our track record of executing the transmission line ahead of schedule as well as below budget. So we are very mindful about the schedule which we have won, and we have a very, very competitive team coupled with the tie-up with the EPC contractor, which will make sure that our internal target is even to complete ahead of that scheduled COD which you are talking about. So we do not see any challenges as far as the execution of the line is concerned.
Okay, sir. How is the bid pipeline looking out?
Okay, Mohit, this is Anil Sardana here. You asked the previous question, I just compiled the figures. So other than the 200 crore tariff that we told you that we recently won, the previous 4 projects that we are doing, the tariff will be close to about 360 crores.
Okay. So how is the bid pipeline looking out? How do you see the opportunity, the transmission bids?
The pipeline is actually bursting at seams. It is very healthy. In fact, the number of projects that are being bid out are quite a lot in terms of number and size, because one is, of course, the renewable evacuation project, the other is the ISTS project and the state project. So the pipeline continues to be very healthy.
Is it possible to quantify the pipeline for the immediate opportunity?
Already for which the RFQ is submitted or the RFQ has been demanded is anywhere close to about 40,000 crores.
Okay, sir. Thank you, sir.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Jay Prakash from HSBC. Please go ahead.
Yeah, hi. Thank you for taking my question. First of all, congrats for achieving a good set of EBITDA numbers. I just need some clarification on the total debt number that you had mentioned for financial year ending March 2019. From the annual report, I see that it is at 20,000 crore. In the presentation I see at 18,900 crore. May I just have the difference by how to reconcile that number?
Sorry, can you repeat your question?
He said, from the
that FY19 is mentioned as 18,900 or 18,700 crores in the PPT. So in the annual report, I find it at 20,130 crores.
That's the regulatory. So if you look at this, there is a regulatory debt of close to 800 crore, which is recoverable from the customer. So this is, we had when we had an agreement with the Reliance, whatever was the past due which was receivable, what we have done is that we have raised the money and given them the upfront, and we are collecting regularly from the customers over and above the regular tariff. So as far as we are concerned, it's a neutral for us. And then there is a working capital of 500 crores. So if you remove both these figures, I think it should tally with your numbers.
Okay, sure, sir. That answers my question.
Okay, thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. Participants, to ask a question, please press star and 1. Anyone who wishes to ask a question may press star and 1. The next question is from the line of Parth from Goldman Sachs. Please go ahead.
Hi, sir. Congratulations on a good set of numbers. Just was wondering if you could throw some more light on your capex plan for this year, where it's being spent in the distribution segment. I think if I heard that right, so if you could just throw some more color on your capex plans. Thank you.
So, Parth, the capital plans between ATL and AEML this year is likely to be about 4,000 crores. As you are aware that we have a free cash flow after taking care of our interest and repayment obligation close to about 1,400 crores, which is good enough for us to leverage and execute close to about 4,500 crores worth of capex. Since we already have a healthy pipeline of projects at hand, including the approvals that we have received at AEML from regulators, we will spend close to about 4,000 crores for sure.
So our planning is to maintain the investment grade rating. And, as we are doing it, our debt EBITDA levels will always be under check, and accordingly we will be doing the capex for the growth.
Got it, sir. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. The next question is from the line of Shreyas Ravikumar from Pioneer Investcorp. Please go ahead.
Sir, can you throw some operational metrics on what sort of returns you get from fixed returns versus fixed tariff assets? What is the difference between the two and how you see them operationally?
So, Shreyas, as far as the regulated returns are concerned, we are all familiar with the fact that we get 15.5% plus the incentives.
Okay.
Now, incentives differ between HVDC projects and HVAC projects of center and state. So you can say, by and large, we will get anywhere close to about 18% return as far as regulated assets are concerned. As far as tariff-based competitive bid projects are concerned, the projects that we have executed thus far and the way the scheme of things are, you could actually look at even double of this.
Okay. And this is purely regulator decided, right? We have no say in any of the assets on how the returns are.
No. I think we have to be clear, Shreyas. The regulator decides only for regulated assets. For tariff-based competitive bid projects, we bid and therefore all upsides get retained with us. Otherwise, you can't have the upside of the type that I'm mentioning. It's only because of the financial structuring and because of the lower cost of execution. Like, for example, just to give you an idea, that when we bid, we had an estimated cost for those 7 projects because those are completed, so I can reel out the numbers. We had an estimated cost of 3,600 crore as the capital investment for those 7 projects. We ended up completing those projects with 3,100 crores. So there is an upside that gets built, and the second upside comes when we upsize the debt and refinance, duly maintaining a healthy debt service coverage, and also improving the amortization because now it's an operating asset. So those two things coupled with the threshold that we had built at the time of bidding actually create the upside which we can retain. So it's nothing to do with regulator. I hope that clarifies the issue.
Perfect, sir. Thank you.
Thank you, my dear.
Thank you. The next question is from the line of Rahul Modi from ICICI Securities. Please go ahead.
Hi, sir. Good evening. Thank you for the opportunity and congratulations on good set of numbers. Sir, just a couple of questions. So firstly, on the distribution business, are we looking to, so what is our target in terms of expansion, looking at franchisee business or licensed areas in particular? And second question would be, sir, any other transmission assets do you think which is there in the market in terms of M&A? Thank you.
Hi, Rahul. It's unfair for you to ask us a question about M&A. So, especially you, for various reasons. I don't want to talk about that. But yes, the company continues to look at the opportunities that are there in the marketplace in terms of the M&A opportunities. So we will continue to look at and we'll share with you once we sort of zero down on any of those. What was your first part of the question? Vasudha, you remember?
It was more on the distribution that are we looking at growing in the franchise areas if it comes up for bidding or only license areas, and how do you see this landscape looking at?
So Rahul, at this stage, as we talk, there are opportunities being promoted by 2 states. Orissa has already come out with both. They have come out with 3 DISCOMs on PPP basis and 1 DISCOM with 15 franchisees, right? And we are evaluating those. The other is the state of Rajasthan, which is hinted at 4 more towns to be covered through what they call as franchising, but it is mostly nearing the contours of a PPP because they allow you to do capex and take it to the regulator. So we are open to all of that, and the entire reason why we got into distribution business is because we believe that there will be tremendous opportunities in the times ahead, and we will be open to looking at those.
Perfect, sir. Thank you so much.
Thanks, Rahul.
Thank you. The next question is from the line of Amit Jain from Franklin Templeton. Please go ahead.
Hi, thank you for taking my question. I see in the presentation that you mentioned that there is an expected TBCB pipeline of 17,000 crore in FY2020.
Can you talk a little bit about the competitive intensity that you're seeing in these projects that you are bidding, particularly in TBCB?
Hi, Amit. At this stage, we have seen there are three permanent players, which is Power Grid, Adani Transmission, and Sterlite. In addition, we find players who come in and depending on different jobs of interest, and they include, we have seen Renew participating, we have seen Torrent participating, we have seen some of the other companies come in and go by, but right now the real competitive intensity is between the three large players.
Mm-hmm. And in terms of any pressure on the way it is being bid and anything of that sort?
So, Amit, the pressure is a function of the jobs in sight. Since the pipeline has moved between what you saw at 17,000 to what we now have currently, which is suddenly swelled to something like 40,000 or so, I guess one can decide the threshold and stick to that. So I haven't encountered at this stage the pressure. There could be always anxieties in terms of which job you want to have and what price that goes. But on a generic basis, because the question is very generic, I would say on a generic basis, I don't see those pressures.
All right. Thank you for that color. Thank you.
Thanks, Amit.
Thank you. The next question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Yeah, so thanks for the opportunity once again. So is there one clarification? So is there any regulatory asset build up in Mumbai now, or you think is mostly largely in line now?
No, according to us, there is no regulatory asset built up.
Okay. And so given the fact that distribution losses are now around 7.8%, how much low it can effectively go, and what is the benchmark for right now for FY20?
Okay, Mohit. The distribution loss consists of three types of losses. One is the technical loss. The second is the theft. And the third is the erroneous billing or poor collection. So that's the third category. Now, as far as technical losses are concerned, in an underground network of the adage and the pedigree that we have in Mumbai, our estimate is that that loss is anywhere close to about 6%. To reduce the technical losses below 6%, one will have to do an intense capital addition in terms of putting additional cables, additional transformation capacities, etc., etc. So that's the situation with regard to the technical losses. As far as the balance part of 1.7% of losses under the other two categories, I don't see any reason why we should not be able to address that over the next 2 to 3 years period.
Last question. There was this case, ongoing case in Supreme Court on standby litigation, I think, which ruled in favor of Adani Electricity Mumbai. So is the entire thing a pass to the consumer, or is there any benefit which we can keep out of that particular amount?
Yeah, so Mohit, as far as the consumers are concerned, they have already reaped advantage of this. So nothing is to be passed to the consumers, and this amount entirely and squarely is to the account of our infra, as per our agreement.
Okay, so it has nothing to do with us, am I right?
Nothing to do with Adani Electricity. Except that, of course, as a part of the SPA, if any amount is due to to us from them, we can sort of square off, but that's different. That's between us and Reliance Infra. As far as the amount is concerned, as adjudicated by Honorable Supreme Court, it entirely belongs to Reliance Infra.
Okay, sir. Got it. Thank you, sir. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions, I now hand the conference over to Mr. Anil Sardana for closing comments.
Hi, thank you so much for being on the call. Really appreciate your joining this Q1 call. As I have always mentioned, that it's not necessarily the only media through which we can engage. You're almost free and you're welcome to get in touch with our investor relations team, and we'll be very happy responding to all your questions and anxieties that you may have. Once again, thank you for being on the call. Look forward to you joining us for Q2 FY20. Thank you and good day.